a gold standard of stability. Canada's big banks were slightly shaken today. Their credit ratings downgraded over concerns about debt and housing prices, sending a message to investors about potential risk.
This is a system-wide problem. The operating environment affects all the banks fairly closely in alignment.
This is not a positive thing. This is not the attention that we want to draw.
The downgrade could make it more expensive for banks to borrow money, and that may get passed on to consumers in the form of higher interest rates or bank fees.
I mean, this is early days. I mean, this has just happened, and we have to see how the markets respond.
Concerns about the hot housing industry are nothing new.
Of course it's vulnerable to a correction.
The Bank of Canada governor has been flagging it for years, along with Canadians' record high personal debt levels. The worry, just how vulnerable is the economy and what would happen if there was a major global shock.
If I'm unable to make a fair deal for the United States, meaning a fair deal for our workers and our companies, I will terminate NAFTA.
President Trump's stance on trade could be that shock.
Our dollar will fall even further if we lose jobs because of any kind of thickening of the borders because of trade.
Lost jobs mean more people can't afford to buy homes or pay off their debt. Various levels of government have taken action to cool the housing market, but some argue it's not enough.
I'm hopeful that this downgrade increases the pressure on the stakeholders in Canada to really do more to try to slow the rate of growth in housing.
Moody's failed to forecast the 2008 U.S. housing crash, and some economists say this downgrade is a cautious move and that danger isn't just around the corner. But it is a reminder that high levels of debt and soaring housing prices have created risks for Canada's economy that are being noticed beyond our borders. Renee Filipponi, CBC News, Toronto.